Hey guys, welcome to another video and thanks for clicking on this one. In this particular video, I am here to share with you just to make sure everything is working fine. Okay, good. I want to make sure that you understand one of the things that a lot of people, not just me, this is something that I've learned over the years, and this is trying to understand the best time to invest in the stock market, especially when you have a situation in which you have, let's say, a huge sum of money, and huge sum of money is, subjective. It can be $1,000, it can be 5,000, it can be 10,000, it can be 50,000, right? It all depends. But the point here is you have this lump sum that you want to put in the stock market, and you're asking yourself, is this the right time to put the money in the stock market? Well, one of the gauges or instruments or index that you could use to decide if it is the best time to put money in the stock market is the fear and greed index. And that is because as investors in general, we are emotionally driven. Now, when there's fear in the market, what does that mean? People are scared to invest. People sell their investment. People cash in their investment. They try to lock in the profit. And when they do that, guess what happens to the stock market? It goes down. On the other hand, when there's greed in the market, what happens? Well, the stock market goes up. People are making money. Everybody's happy, and guess what? There's a tendency for us to want to put more money in the stock market because, hey, stock market is growing, it's making new highs, and everybody's happy. And that leads us to buying high. Now, when you have a lump sum of money, the question is, do you invest that money in a time when the fear and greed index is tilting to the extreme greed section? That is a question for you. And this is something that, you have to decide what is best for you. Now, I know that one of the things I talk about on this channel is investing using an automatic investment. You set it up so that it automatically invests on a regular basis. And that is great. There's nothing wrong with that. But when it comes to having a lump sum amount that you want to put in the stock market, when is the best time to do that? Is this season that we are in, is it the best time? And I'm talking about season because the stock market just made new highs this week. New highs this week. And actually, let me share that with you right now. One of the things to remember is that when you have new highs and the market is making new highs in the market, one of the things that you want to caution about, of course, is buying high. All right, buying high, and then the market pulls back, and then you're in the negative. Now, you're not trying to time the market. The goal is not to time the market. The goal is to have a long-term approach or mindset, or set up in a way that you don't have to try to time the market. But like I said, the focus is if you're investing a lump sum in the stock market. And as we can see, this is the Dow Jones Industrial Average. If I could zoom in, you could see we touched that point around, this is over 5 years now. As you can see, it's been going up. And on this day, we came to this point of 44,910. And let me just close this here. And if I go back to the last 5 days, which I hope it loads. All right. We are touching those points almost of that 40, and actually this S&P 500 actually made a new high. All right, this came really close to those highs of December. But let me switch to the S&P 500 here to show you that I think that has a better graph. You can see it is a new 52-week high today. That was as of yesterday. The stock market is closed in the United States today, and as you see, 62.79. The last time it came close to that point was 60.90, I believe, and here was 61.15. Okay, so the point here is, and by the way, did you see that? Right, that's it. Okay, so the point here is, the stock market is making new highs. Now, if you take a look at the fear and greed index, which you would find on different websites, but if you check CNN, for example, you would find one of those there. And this is the fear and greed index. One of the things you would see is that it has the extreme fear. We have 0 to 25 is extreme fear, 25 to 60 is fear to neutral. Then you have the greed, and you have extreme greed. And now once you cross above 75, you find yourself in the extreme greed portion. Now, the question is, what does this index, what does it really do? Okay, it says it's useful to look at stock market levels compared to where they have been over past few months. When the S&P 500 is above its moving or rolling average of the prior 125 trading days, that's a sign of positive momentum. Now, to read more about the Fear and Greed Index itself, you have it here, which I'm just going to read the important part. It says the Fear and Greed Index is a way to gauge stock market movements and whether stocks are fairly priced. And that is key, because what happens is that we're making new highs. We're making new highs in the stock market. And when that happens, guess what? The stocks are considered overly priced. That is the truth about it. And when you see this Fear and Greed Index crossing above 75, that is telling you that, hey, there's this almost irrational drive or emotional drive that is pushing the stock market higher. And of course, we had some good news with the bill, the big beautiful bill. Okay, the past. We also have the tariffs. Of course, there's still some things that are lingering, especially with Europe. When it comes to tariffs, that is uncertain. Of course, Canada is another one that is still uncertain. But there was some good news in the stock market this past short week, anyway, trading week. And that has driven the stock market to these new levels that we're seeing it. And of course, if you take a look at the Mag 7, the Mag 7 makes a huge portion of the S&P 500, and they've done really well over the past 2 weeks. Guess what? All of that has pushed the market really higher. So back to the question, you have a portion of money that you want to invest in the stock market, and you're asking yourself, should you put this money in the stock market now? Here's the deal. If you're going to invest in the stock market at this time, there's nothing wrong investing, but having a huge portion of money at this time seems a little counterintuitive, because the goal is to try to buy low, kind of sell high. Now, if you're holding long term, you may not have to worry about time you're buying, but if you're putting a huge portion of money in, the advice is that you want to dial it back. That means you don't have to put in all the money at once. Okay, so if it's $1,000 for you, if it's $5,000 for you, whatever that amount is, it is best that you actually slowly buy the stocks, ETFs, whatever that may be, slowly buy them and distribute that money over time, or at least invest the money over time. That way, you're not going all in at a very high point. Going all in at a very high point means that you stand a chance of losing a lot of money, because if we take a look at the, let me pull this back here. If you take a look at the charts one more time, one thing you would notice, okay, let's go year to date. Let's go, let me pull that back here. One thing you notice on this chart is, and actually I can do advanced chart here. One thing you notice is that this is where we are right now. Okay, we're at 62. This is the S&P 500 index. We're at 62.79. And if I could move this one right there a little bit up, do that. All right, that's better. All right, if we look at this point right here where we are, this is new highs right there. We had a very strong V-shaped recovery. Why? Because, hey, going into January, February, the market was making new highs on the S&P 500 particularly. All right. We got here, and then we had the tariffs, or we had the Liberation Day announcement, and of course, everything took a downturn. And we came all the way down to the lows of, I would say, 5,000 on the S&P 500. I even dipped below 5,000 at some point. And ever since, we started this nice recovery, which is V-shaped, okay? Now, what is likely going to happen depending on what this next week uncovers in terms of tariffs and in terms of just the political environment we're in, right? A lot of things are still going on, particularly the tariffs, right? Depending on what happens, we could find ourselves going back down, okay, to touch these highs, okay? Right now at 62.79, the market could go back to these levels of 6,000, somewhere in that range, or it could go down to find a new support at around 5,700. Now, and of course, we could still go back down here. Yeah, the stock market has its own ways of doing things in terms of whatever ensues or develops. But our goal for this video is if you have this lump sum you're trying to invest, you're thinking to yourself, should you go in now? Should you wait? Should you invest? This is the time to be very careful, right? Because in as much as the stock market is making new highs, this is not the time to go all in thinking it will continue. When this stock market is making new highs, we are in areas of, I would say, uncharted territories. And what does that mean? What that means is that, hey, we are getting into this environment, these territories that you don't know what is likely going to happen, especially with the environment, the political environment, tariffs, all that stuff going on. We don't know what's going to happen. But one thing we know is that this is an environment we've never touched before. So two things, it can either continue to go up, which there's generally what we call resistance levels at some round numbers. A good example would be 6,300, 6,400. Those are generally areas of resistance, and the stock market may struggle to break. We just broke this area here, about 6,100. That is where we broke. You see this area here that you see? That was where the resistance was. We came there, touched there, bounced down, bounced from a support, and came back to touch 6,100. And of course, we fell. All right. That was when all those Liberation Day announcements came through, the tariffs, all that stuff, right? With China and the back and forth between China and the US. All of that led to all this that we see here. And of course, we then bounced off that 5,000 point. As you see, again, those even round numbers are generally areas of psychological either support or resistance. And that is what we found here. So at about 5,000 point, somewhere in that range, we bounced off that, and it's nice. It's a nice V-shaped recovery. Now we are approaching that 6,300, which is odd. Okay. So if we get some good news, breaking 6,300 shouldn't be a problem. But 6,400 is definitely always would likely be a point of psychological resistance, a part where, people tend to fear that, we might find it difficult to break. Now, you have to understand, if you're investing long term, you don't have to worry about this. If you have a lump sum of money to put into the market, it is best to dollar cost average. That means if it's a $5,000 amount you have, it's best you put in your 5,000, your 1,000, maybe 1 week, and wait out another week, do another 1,000, and just slowly invest that money. Because if you go all in at this point, if the market goes down on you and it goes down by a few points, guess what? You're already in the red, and it's take you some time to then recover, or at least recoup the losses, because you just never know what can happen from here. Like we've seen here, we touched these highs. We made a new high in January, December going into January. We touched those points again in February. It took another 4 months or so to come back to this level. Now, the ideal thing is, let's assume that you had put in money here, okay? And actually, I can have my pencil. Okay, if you had put in money here, and for some reason, like this point, and for some reason you find yourself, something like that. All right, you find yourself in the red. Well, I hope that you continue to buy. All right, and that's where you don't want to put in all your $5,000 all at once, or your $1,000 all at once, because if you had bought everything up here, you're out, you're tapped out, you don't have any other money, right? And then this thing has made this downward spiral all the way down to these levels. Okay, finding ourselves here, I don't know why it keeps doing that. Finding ourselves here means that now your $5,000 is now worth only God knows, 40 something hundred, depending on what index you've invested in or ETF invested in. And then you then have to wait for all of this to come back, which, as you know, that can take a while. All right, that can take a while. So it's best to find to dollar cost average, buy some of it, at some point, and then you slowly invest it over time. Slowly invest it over time. So let's say you buy some here, and then you continue, you buy some there. Guess what? By the time you recover, okay, what happens is that because you've bought more shares at a lower price at this point, you're likely to break even much sooner, maybe somewhere here, instead of waiting until it is up the way to the level you entered in the first time. So That is where this fear and greed index comes in. Okay, when it's extreme greed, you don't want to be going all in here. Why? Because this is the time you're buying the stocks or shares or ETFs at an expensive price. The goal is to buy low. And how do we know that? When you find this extreme greed indicator somewhere in the fear region, somewhere in the extreme fear, this is where you can go big. All right. So you have the 5,000. Sure. If I see an extreme fear and I have that cash of that chunk of change to put in the market, that's the point I want to go bullish, right? I want to really go extreme. Now, I'm picking the stocks or I'm picking the ETFs carefully because I'm not going to pick ETFs that I do not have faith in long term. So I'm picking ETFs or index or mutual funds that I know that they have a strong maybe diversification in them, like the S&P 500, SPY, for example, BYM for those who love dividends, or SCHD for those who love dividends. You have somebody actually mentioned SPLG yesterday. JP is another one, or JEPI rather. If that's what suits your boat, right? That is the point I'm going big, right? Because I know that I'm getting this ETF at a discount. At this point, you're paying a premium for whatever you're buying. For whatever you're investing, you're paying a premium. Now, again, there's nothing wrong in continuing your dollar cost average, buying, whatever shares you're buying on a regular basis, even here, because you just never know. It could continue to push higher. Right now, we're at 78. We could find ourselves at, 80 or 90, right? Even though those are rare. But anywhere below the neutral fear, especially into extreme fear, that is where you kind of want to go big on what you're purchasing. That is really what I want to cover in this video. It's been a great stock market week. If you invest in, of course, you know that everything has been green. That's the truth about it. And that is where, if you're not in a situation where you're trying to time the market, you're trying to buy, trying to wait for that perfect moment to invest, or you're not trying to, do options and day trade. These are the kind of weeks that you'd enjoy. Why? Because you haven't done anything, but you've made money. Okay. And of course, sometimes you may need to sell some shares. And in fact, I've been asking myself, I do have some NVIDIA shares. Talking about NVIDIA. Okay. NVIDIA was, let's see, I think last time I checked, it was like 156, 157. Where is it? NVDA. And 159 actually. So it kind of after hours went up. Okay. And let me scroll away. Okay. Made new highs on the NVIDIA, right? And at some point I'm asking myself, okay, when do I sell some of this? Because NVIDIA, even though I believe in long term, so I'm not worried. Okay. But sometimes when it's becoming a huge portion of a portfolio in terms of the appreciation that stock has had in your portfolio, it might be time to maybe de-risk. And de-risk means that let's sell some of it. Let's say you have 30 shares of it, right, in one portfolio. And 30 shares, it's a decent change that if you can sell maybe 5, kind of just reduce your exposure, because guess what? Tech companies, they are susceptible to, political environment that we find ourselves in, where, one of these tariff situations can come up again and then it sells off, but at least you lock in some profit. And then you wait until it goes down to a certain value, depending on, your time horizon. Okay, you buy more again. All right. So for those who might have bought this, let me just go back 3 months. Literally, if you had bought this at $100, you're up, almost 60%. Okay. Actually, not. Yeah, maybe you up $60 rather between then and now, and that is amazing. So imagine you bought 10 shares of it, or 20 shares, or 50 shares, depending on what you can afford. You would be seeing a lot of money, at least change, that you can then use, maybe sell some of it, buy things like SPY, and that's what I do. When I sell some of this type of shares, I take some of that profit, I go and put it in the diversified index, like the SPY, like the VOO, the VTIs, and the likes, right? But the point here is, if I make 60, and if I make $60 per share, because I did buy some at this price point when it went down a lot, sell it, take the profit, buy the SPY or VTI or VOO. Now that money is well invested in something that is well diversified, Now I don't have to worry about the risk of this dropping 30, 40% or 20% in the near term. Now, NVIDIA is definitely one that I believe in long term. So you can also wait. Maybe it's okay accepting the risk for the sake of knowing that NVIDIA has, you don't have much to worry about when it comes to NVIDIA itself. I mean, again, this tech can be very volatile. There's always the risk of it going down. You feel like, yeah, I've made enough money, let me just sell some of it. Sure, go ahead. Another great one, Palantir, is another one that has done really well. Now, again, we are approaching an area of, talking about NVIDIA particularly, we are in the area of, uncharted territories, because now we're making these new highs. We don't know what's going to happen, especially with the company short term or near term anyway. But one thing we know is that NVIDIA has, they are leading the pack when it comes to AI and graphics cards, and just integrating well with the environment, the environment we find ourselves now. Palantir is another one that has done really, really well. And honestly, I do regret, because I sold some of this Palantir stock at around $80 when we touched those levels, and now we're at 134. So I've given up about $50. That I could have made. But hey, if you make profit, profit is profit, right? It's best to take that money and put it in your SPY and the likes, so that money is now, again, it might not make as much money in the near term, but at least it's invested in something that is diversified. You don't have to worry about it, and you can continue to see your gains over the years. That is all I just wanted to cover. The key thing here was just the fear and greed index. Okay, it's quite high, and of course it could go higher, but remember, this is the time to be careful, because buying here means that we're buying at a premium price. Goal is to buy low. So when it's at this levels, extreme fear, this is where you want to go big with whatever you want to invest in, and maybe carefully invest at this point. But in any case, investing long term always beats time in the market. And I hope that you found value in this one. If you have, don't forget to drop a like on it, and I would love to see